the inflation range that you guys have of 4 to 6%. Can you expound on why you guys think this is the right range and how it was developed and the importance of it?
Well, my contention would be that if we were to get capital into areas that would boost the productivity of the labor, manufacturing, agro-processing, even agriculture itself, we could possibly see that increase in productivity. But in going into, I guess, what the economists call the non-tradables, I mean, tourism is a hugely capital-intensive investment, and there's very little that you can do to improve the productivity of the individual tourism worker. But if you were to invest, say, if we were to see an expansion in agro-processing or furniture manufacturing or some other type of industrial activity, the prospect of higher productivity would be there. Even the mining sector, which has a lot of capital deployed, and the workers in that industry are very productive. But it's a wasted resource. I don't think we can look to bauxite or alumina as the way forward.
When do you expect the economy to return to pre-COVID levels?
Okay. Our expectation is that we won't return to pre-COVID levels before 2023. And there seems to be a lot of agreement. I mean, certainly with the Planning Institute as well shares this view. I mean, we are beginning to see nascent signs of recovery, however. When we look at GDP in the March quarter, that actually grew over the December quarter. It's by 0.6%, right? So it's still some growth. December over September, last year December 2020 over September 2020 also showed some growth of about 0.9%. So we are beginning to see some recovery. The signals coming out of the tourism sector is quite encouraging, quite positive in terms of the bookings, in terms of expected occupancy levels. So we feel confident that, there is some nascent recovery. We call it a Nike swish recovery.
Okay, yes.
But of course, there's still some amount of uncertainty. A lot depends on how we manage the COVID crisis locally. A lot depends on the rollout of the vaccination program. So there's still some risk. But by all indications, it seems as if the worst is behind us.
Okay, that's very good to know. Someone is asking, export-led growth in a highly import-dependent, low-skill, low-tech economy. Which sector would drive, or sectors would drive this strategy?
Well, the first thing I think is that we produce less in agricultural produce now than probably at any time in the last 50 years, and it's not because the island has shrunken and we don't have the land available. So that's one area. There's also a sort of vicious circle. Because we have maintained quote-unquote subsidized exchange rate for so long, we've created a demand for imports and we've created a disincentive for exports. If we turn that around, then we change the equation. We disincentivize imports and we incentivize exports. I'm a firm believer in the market economy and in market forces. So I don't think we have to sit and wonder. Businessmen are in the business of making money. And if the opportunities are in export, that's where people will go. If they're in manufacturing, if they're in agriculture, BPOs, tourism, whatever it is, money will go where the opportunities lie. So I don't think we have to ponder as to, Is it going to be tomato ketchup or hot pepper sauce? Is it going to be oranges or pineapples? I don't, furniture or some other widgets. I don't think we have to puzzle about that at the moment. What I think we have to do is create the macro environment that incentivizes export production.
Okay. Why has Jamaica emerged as the implicit leader of the regional capital markets, and are there any benefits, or what are the pros and cons of this, essentially? And I guess that could be a question for the panel. Dr. Robinson, I don't know if you have any strong opinions on more of a GSE securities dealer type issue.
Okay. In terms of why this has happened, a couple of reasons. First of all, Jamaica has had an open economy, certainly compared to our regional peers. I mean, capital can freely flow in and out. That's number one. Two, because of the economic reforms that we've undertaken over the years, Jamaica is being seen more and more as a less riskier prospects than before. And we see that in our bond spreads. We see that in our equity market. The other thing is that the fiscal consolidation, that deleveraging by the government, has added a lot more liquidity to our financial markets. So we have become an attractive proposition. I mean, it is good because we want Jamaica to be a destination for capital. The challenge we face, though, is that we have to ensure that this sort of environment redounds to the development of Jamaica. In other words, we firmly believe that our domestic money and capital markets must serve the development needs of the country. So we want to be able to attract capital to finance domestic investments. And that is what is very important for us at this time.
That's a good point. Julian or Charles, do either of you have anything to add to that?
I mean, I think Wayne covered it. I think we're definitely a lot more flexible in terms of the flow of capital than the two large English-speaking neighbors in the Caribbean who would possibly be competitors. And I also think our proximity to the U.S. market and the expertise that Jamaicans have gained from working in the U.S. market, a lot of that is here, and I think has helped the development of our own market here and has attracted capital from across the region. And I also think the stock exchange has been innovative itself in terms of we have a junior market. I'm hearing discussions about other markets. We are constantly bringing new products to the table, which make us attractive. And I think that is positive for the economy.
Okay, great. Charles, anything to add from the securities dealer standpoint?
Yeah, my only addition would be that I think that we have to be prepared to accept the principles of a market. If we talk about Jamaica being an open market, it means that we must be prepared to accept funds coming in and funds going out. It can't be a one-way flow. A one-way flow would be debt. You can go and borrow money and...
So I suppose you weren't in support of the BOJ's restriction on dividends?
Well, I mean, I don't know that it might have been a prudential move, but what I'm saying is that...
It was a prudential move.
And that's not even where I'm going. What I'm really saying is that if we're going to accept that we're operating an open capital account, then we have to be prepared, and we want money to come in. We have to be prepared for money to go out too. I think that one of the things that we also have to, we have to have the confidence to accept these things. 30 years ago, we lifted exchange controls, we nominally opened up and so on, and we had tremendous inflows of capital. We have $3 billion US in the reserves. The banks are holding hundreds of millions of dollars of U.S. Investments. Before that, we had minus 900 million in reserves and, nothing in the banks. But we have to be prepared to allow the capital to both move in and out if we're really going to become a center, a financial center in the Caribbean. And we have to accept that there are going to be times when the market is going to run and people are going to pull their money and run. I mean, that's part of being a part of the global financial market. If we want to control everything, we're not going to get the benefit of it.
Low productivity has been an albatross for 40 to 50 years. The pandemic gave us a chance to focus on economic efficiency. What can be done to improve this into the recovery? Does anyone have an answer for that question?
I don't think there's any short-term solution, just being frank. And I think the fallout in education is going to make that challenge even bigger because I think you're going to have a set of young persons leaving high school with no capacity to function in the kind of society that we have. So the short answer is there is no short-term fix to the problem that has developed over 40 to 50 years. It requires a significant investment in our human resources so that we can attract beyond the low-level BPO, tourism and construction type jobs to higher value things. But you will not get the higher value investments if you don't have this higher value skills because you're competing with everywhere else in the world. I was at JAMPRO. When I was at JAMPRO, we had somebody who wanted 200 developers, software developers. We couldn't find that. We couldn't find 200. It's easy to find it if you go somewhere else in the world. So I'm just saying, we know what the problem is, but being in a position to train that level and retain is something that takes time. And there's no short-term fix to it.
Okay. Charles, your take on improving economic efficiency.
Right. Well, again, the question I would ask is, look, we have 300,000 people, they're barely literate, but they're willing to work. What are the occupations, the internationally competitive occupations that can absorb them? I think that's the question that we have to ask. We have a particular workforce. These are the characteristics. They may be far from ideal, but throughout the world, there are activities that people with those levels of education and skill can be absorbed in. China today is not China 30 years ago. 30 years ago, they were dumping out low-level, cheap manufactured goods. Now they're making Apple iPhones. We may be at the level now where we've got to chomp out low-level, relatively low value-added stuff. But if that's what we can do, that's what we can do. I think we need to allow market forces to send the signals and absorb investment in the areas where we can be competitive. To put a plug on for the BOJ, I think one of the very good things that they've done, interest rates in Jamaica are relatively internationally competitive. You can invest at Jamaican dollar interest rates and be internationally competitive. That is key because we need to mobilize domestic capital to invest in productive enterprises that are export-oriented. So it's not just housing developments and hotels. We need to invest in export production as well.
Okay. And Dr. Robinson, I'll give you the last word.
Yeah, I can't, there's not much I could add to what I said before, but probably one thing I'll probably just stress. COVID has shown that we're in a new paradigm. And in this new paradigm, the economies and the societies that will strive and that will be efficient are the economies that are digitally capable. And therefore, Jamaica has to catch up. Jamaica has to move quickly up the curve in all spheres of our operations, all spheres of economic life. And this is one of the reasons why the central bank, we are pushing central bank digital currency. Because that's just one part of trying to move Jamaica along the digital highway.